Man, it is shut down. So last year I talked a lot about the cash for keys, knocking doors. We would go to the auction, we get the list, we would condense the list down to deals that made sense, that had a certain spread to them. I'm hitting the doors, and it was great. Like that's how a lot of those deals that I did last year came about. Now when I'm going to doors, and it's like 4, 5, 6 flyers, just like mine at the door, and I'm like, hold on, time out, what's going on here?
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. Hello and welcome to episode 225.
Last year at the RPOA annual conference, I met Ramond Harris for the first time. And after hearing his story about flipping, wholesaling, and rehabbing in the Detroit area, I knew that we needed to record a podcast. So you may remember the Mastermind conversation we had with friends of this show, Justin Workman. Say hi.
Hello, Brian.
And Patrick Spitzley.
Hello, friends.
And that was on episode number 168, where we helped brainstorm some ways for Ramond to fix his broken business model. Now, a year later, we've all met back up at the RPOA 2020 annual conference, and we're going to mastermind again with Ramond to see what's changed and how his business has progressed since we last talked. We'll also be discussing some new challenges that have cropped up and how he might tackle them. And just to make it even more interesting, we've invited Stephen Benedict to join us because he has his own particular value to add to the conversation.
Hello, Brian.
Ramond, welcome back to the show.
Hey, thank you for having me. Thank you for having me, Brian.
We need to recap here.
Yep.
Because when we spoke to you last time, just tell us in a nutshell, what was it you were facing? Because you were having some particular challenges in your flipping, rehabbing, and wholesaling business.
Correct. So the primary thing was raising money in money partners, trying to make sure that I get good terms on the splits, and that was one of my main things. Back then, we were doing 50-50 deals a lot, primarily. That was mainly the only thing that I was doing. And with the wholesaling business out my way, things have kind of narrowed down. So that was a big part of my business in the past, and I've kind of shifted a little bit away from it going forward. We also discussed the managing and managing project managing as far as the flips, and how those things, maybe getting a builder's license could help elevate my my skill set, help me become a better rehabber and flipper, and those things I think that was some good advice that I got last year.
Okay, because the problem you were having was you were doing a lot of the work, but a lot of the profit was going to your money partner.
100%.
And not enough was going into your pocket to really, it was keeping you afloat, covering your expenses, but you weren't building up any real wealth from doing it. You weren't building up your capital stack.
There we go.
There was also, we'll come to the trucks here in a moment, because that's the bomb you dropped on us. But Justin, did Ramond sum it up pretty well? Is there anything he left off the table?
No, I think he kind of covered the basics. Essentially, he was somewhat early on in the flipping career. He's been at it for a while, but just could not get ahead. Every penny he made kind of went to cover other expenses, and worked really hard. He had a rental property and trying to earn cash flow from it. But just could not get ahead in the end. I think it really covers the basis of where we were at.
We'll have to dig into the trucks at some point.
Well, Patrick, since you bring up the trucks, which 40 minutes into our conversation, after talking about everything, what did Ramond say that?
In summary, he owned 2 or 3 trucks that he was paying, had a debt service on that he was paying, but these trucks were parked or unable to be on the road, unable to make an income, and the profits from the wholesale and the flips and all of that were getting undermined by the expense of holding onto these trucks.
And that expense was somewhere in the range of $2,400 a month, if I recall.
It's like
$2,200. So we're talking $25,000 a year of your cash flow or income was going to the debt service on these trucks that were just sitting idle
Correct.
from a previous business that you had
Yes.
started.
To hold a depreciating asset.
Oh my
sadly.
goodness.
Right.
Ooh.
Yep. So the advice there was to what? Keep the trucks and just keep paying the $2,200.
No,
a month?
the advice was to sell the trucks immediately, fire sale, and that did not happen. I did not sell the trucks. I still have them, and I'm still, unfortunately, paying on the trucks.
So why do you still have them? Tell us why.
So all right. So when I went back home, I got one of them kind of prepped up, and I started trying to sell it. And I'm trying to sell it for the number that I think makes sense, which was I think around like 19,000 was the number that I had. The issue is that the trucks that I have, I got them from Penske, and Penske was selling them at an amazing rate at the time when I purchased them. And the reason that they were selling them was because they are not very good trucks, and they have some issue. They're international trucks, International 4300, I think is the model, and those trucks have a constant maintenance issue. And they knew that, so they got out ahead of it. Unfortunately, I'm stuck with these trucks. So when I went to try to resell, the offers that I was getting was just like, it made my stomach hurt sometimes. Like I got like offer for like $5,000. I got an offer for like $3,500, and it's just like, oh, it was tough. So I probably should have pulled the trigger, and I'm probably gonna have to go home and reassess that.
Yeah, no, I got to beat on you.
You know
I think
that.
I was the one that beat on you the most last time, and we discussed it kind of in depth. I know you're gonna take a loss on these things. It was a bad decision.
Yes.
I mean, you had something good. You thought you got a good deal on it. It turned out to be a bad decision. And at the time, we said you got to dump these things, take the money from the sold rental property and some other cash and put it with it, and just get that payment out of your life.
Right.
I mean, that was the whole point of, we were trying to take some money they had and just free up some cash flow, because it was an extra $25,000 a year, basically, is what you were paying to lose money on an asset. It was really, you got to just sell these things off. You're going to take a hit. We all know it's coming. Do whatever you can to cover the difference on the notes and just get rid of the notes.
I'd prefer a one-time $15,000 loss than an annual $25,000 loss into perpetuity.
And what's the total that you owe on the trucks right now?
One of them is like 12 maybe, and then the other one is it's coming down too. It's probably like 15 or 14. They coming down. I got them at like 35.
Okay,
So it was 35 when I got them.
just a little bit over what you're paying yearly is what you owed on those trucks. So
Correct.
the prudent thing would have been to have
Yes.
sold the damn truck for
Yes.
$5,000
Yes.
and then just
Be
take the
done with
haircut and take that
And continue.
$24,000 plus the $5,000 and pay off the truck.
Exactly. Yes. That should have been the way that worked.
And I remember beating on you pretty hard about this.
Yes.
And so far, since we've talked, before this podcast aired, I continue to beat on you about that. You just got to cut the bleeding off.
Yeah.
Once you
Sever that
stop,
limb.
Yeah.
once you stop the bleeding, it'll help your overall financial picture.
And that's so true.
And right now, it's just going to continue to drain and drain and drain.
All right, so psychologically, what is Ramon doing? Is he can't accept a low
Yes.
bid?
That loss is like, it hurts. It's brutal, man. Like,
Is it the loss, or is it the fact that someone is
I don't, it's a little bit of both. It's, I don't know. I think it's a little bit of both.
I think it goes back to it is so hard to admit failure.
Yeah.
This was your first real business attempt.
Yep.
And selling it off means you're kind of giving up on that hope and dream and admitting defeat.
It is.
And it is so hard
But
to
it's also
admit
opening
defeat.
up your heart to new dreams.
Yes, it
right?
is. Yes. It should
You
be.
just got to shed that extra weight.
100%.
though. It
100%.
is literally an extra $25,000 you're
Yeah.
carrying around.
Thanks for doing that
every
math.
Year.
I love you.
You gotta just shed it, and it's painful, and it's
Yeah.
not easy, and it's
So what do we have to do here? Who's going to follow Ramon home?
No, we got to sell them trucks. No, I told Justin this morning. I was in the shower this morning. I'm like, I have to. So when I go home, I have to. It's gonna be back on Craigslist. I'm gonna put them for the 15, and then we gonna see what happens from there. And
I don't mean to pile on, but does this stress you out?
It does. I'm hot right now.
And do you lose sleep at night as a result of it?
Well,
No, I mean the trucks. Of course, we stress them out as well.
Well, lately, not really. Like I say, like I've done better this year.
But every time you make that monthly payment,
that's annoying.
it's got to
Very.
take
My wife
a piece
talks
of your
a
soul
lot
with it.
Yes, and she talks a lot of trash. So yes, it does.
I
It's
guess
annoying.
my
Does
only
she remind you of those trucks
Oh my
every
goodness,
time you have an
yes.
argument?
So like you just throw money out the door. It's like, dude, I was gonna get them back running. Trying to make up something.
Yeah. So what I would say,
Stephen Benedict.
yeah. So what I would say is, if you can find cheaper money, because I heard that you were splitting it 50-50.
Yeah.
That return of not paying 50-50 anymore will pay for the losses of those trucks.
Yes, that's a good
Okay, so thank you for taking us there, because that was one of the action items, was to find new money terms.
Yep.
And you did.
Yes.
So tell us a little bit about that. How has that helped change the course of your business? Because you were doing, what, 50-50 type structure with your money partner?
So pretty much, I would find the property. They would do the purchase. My company would do the rehab. They would pay for the rehab. We'd split profits 50-50. And then sometime there was like a charge on their money sometimes. So it would be like, it was crazy. So yeah, so now we've transitioned, and things are a lot better.
Because you found a new hard money lender.
Yep. I got a private money lender, and things they go a little bit better. I don't really have, like you say, there's more profit now. So now the daily stress or the monthly, nightly stress that I used to have with the trucks, and it is still throwing money out the window, but it ain't as tight no more. So it's like, that ain't really as bad. It's bad, but I don't, like, to your point, like, I'm not like profusely sweating when I write the check.
Sure.
You know what I'm saying? So it's like, it's a little bit better. And
It's become more affordable.
yes.
Still out there.
It's still a problem.
Affordable.
Yes.
I want to also highlight a minute. Where did you find this other investor, the money lender?
Oh my goodness, let's talk about that. So last year here at the RPOA conference, absolutely amazing conference. After I was on the podcast, I reached out and kind of was approached. It was kind of like a two-way kind of thing, and he heard my issue, and he felt that he could help. And from here, that's definitely how I was able to solve that problem. Like, it was probably less than 24 hours, I would say, from recording a podcast that issue was.
Yeah. And I just want to point out that we actually helped you make a connection with somebody else that was here to be your hard money lender. Just
100%.
one more reason why everybody out there needs to come
make sure that they
to
come.
the annual conference.
Yes, and that's why I'm back
That
here.
money lender, in a convoluted way, we'd found out, was already funding your deals, but it was through your 50-50 partner, if I'm not
Yes,
mistaken.
it was absolutely crazy. How we
Have you since cut out the middleman and gone direct to the lender?
Yes, we are direct source now. Yes, it was
Steven's
a crazy.
dying
Yes,
right
it was bad. Steve.
Wow.
It was bad.
All I can say is wow.
Yes, this can't be made up. So I leave the podcast, we record. I go into the deal room on this day, actually this exact Saturday, that the last day of the conference last year. I'm talking. He heard the issue. He named an address or like a city, or like it was the street. He named the street that he was funding back in Detroit, and I'm like, I got a house on that street, and he was like, huh? And I'm like, yeah, that's my house. And he was like, yeah, but I fund it. I said, yeah, that's my partner on it. And he was like, oh, yeah. So now I see how that works. And that was kind of the way that our relationship was
and I
formed.
just want to recap. Essentially, the hard money lender was funding your partner.
Yes.
Your partner was doing no work.
No work.
And just taking half of the profits out of the flip.
Yes.
So he was making money on the money that he was bringing to the table, and you were the one that was really doing all the work on the project.
Yes, unfortunately. So yes, those were the type of deals that I was in, and we've since been able to.
So are you using multiple hard money lenders now? So
No,
that gentleman as well.
I mainly. Well, I still got my guys back home, but now terms aren't as rough now. Like,
Is it the gentleman that you'd met here at the conference last year that you've been using?
Yes,
Oh,
that's
great.
my guy. Yep.
And you no longer have a business partner. You're doing this on your own.
Yeah,
Okay.
I'm solo. Yeah,
Because I mean, with the decision of the trucks, I hope you didn't keep the guy that was taking 50% of someone else's money. That he'd still be around. But
we've since parted ways.
yeah, and if I could give you any words of encouragement, there's nothing in this world that you can invest in from a business standpoint or a real estate standpoint, that's never going to lose money. I mean, the Meyer family loses money. The Waltons lose money. I've lost money. I think everybody at this table has lost money on a deal. It's going to happen. Yeah. And those trucks, not only are you losing money every month, but they're depreciating faster than any piece of real estate would depreciate right now in this market. So, like I said, for meeting you this weekend, I would definitely take the advice and sell those trucks and be done with it, because not only are you paying interest on that, but they're losing money. They're not generating income. And now that you've saved money, if you're paying 12 or maybe even 18% on your hard money, you're saving 32%, in the profits, because you're no longer splitting it 50-50. So it don't take too many of those deals to work with a legitimate hard money lender, which is here at the conference, to make up for the savings of the losses that you're going to incur on those trucks.
And it's a business decision. I mean, cutting your losses is an important business choice to make, and the sooner you make that decision, the better your business is going to flourish.
That is very true.
Now, I want to talk about some of the other takeaways from our last conversation. What was the other? There was two other action items. One of them, Justin,
builder's license.
So Patrick, why don't you talk about the builder's license?
One of the items that we discussed is you should be pulling permits on all of this, and if you are your own builder and you have your own construction company, there's a cost savings and an economies of scale that you can achieve, that you get the direct benefit from, as opposed to going through another builder, or the 2% rebate you get through the RPOA with Home Depot. That's money back in your pocket. And so there's a little business piece of becoming your own builder. And I think we had discussed taking the class and becoming a licensed builder as an action step.
Yeah, and I believe you started taking the class,
Yep,
right?
so I took the class, and in taking the class, I guess I kind of got the liability and all of the, it kind of scared me again, like after taking the class and just hearing all of the different things that you as the builder are now held responsible for. And again, I'm held responsible for those things now, but kind of not.
What are we talking about with liability?
Okay, so as far as anything, I
think we got to go back to a step, because you're concerned about liability, but we got to really look at where liability is placed.
Right. Mm-hmm.
From the beginning, in the state of Michigan, the homeowner is responsible for making sure that all permits are pulled and that work is done accordingly.
Right.
Okay? Are you owning these houses?
Not always.
Not always.
But sometimes.
Okay? Yeah. But even if you are, or if it's in an LLC or anything like that, whoever owns the property needs to make sure that it's properly permitted.
Right.
Now, if you're doing work, especially for others, you need to be licensed and insured.
Right.
And I know there's an additional expense to both of those items, but the insurance for a builder is not that expensive at the end of the day, compared to the liability that you take on. Now, the likelihood of you completing a project in a poor manner and poor workmanship issues is slim.
Right.
You're a good guy. I think you do things the right way.
No, we do good work.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com.
At this point, I just sub the stuff to guys, and it does incur costs.
It does.
But
the other thing I want to touch on is by pulling the permit and having it inspected, it releases you from some of that liability.
Right.
Because now you had a third party look at it and say that your work was okay. They approved it.
Right.
You did things correctly.
Right.
So for somebody to come back and sue you, you can just say, hey, here's our inspection. We were approved. We had no issues. The liability portion really goes away.
Right.
Now, if you're talking from a workman's comp liability portion or guys working on your crew, you have that regardless if you have a builder's license or not.
Right.
You're on the hook. They're either your guys or
Yeah.
they're your subs.
Subs,
A
right.
license does not change that.
Okay. When you say that, if they explain that.
Because it's still your project.
Right.
So if they're your subcontractor, who hired them?
Right.
You're the guy that hired them.
Yeah.
Unless the owner's hiring the guys directly,
Right. No.
then he's on the hook. But
I
it
see what
sounds
you're
like to me you're running the project, you're
Yep.
hiring the subs, you're hiring the people.
Yeah.
You're responsible for them at the end of the day. That's part of being a business owner.
Yeah.
Is you're the guy on top.
Yeah.
You're on the hook.
The next step and the next level of professionalism is getting a builder's
that,
license. And to extrapolate on that a bit, one of the benefits of my builder's license and my team is, though 95% of the work that we do is on my projects and things that I own exclusively, we have the ability as a business to take on other work, and at which I'm still shouldering liability, but to me that's risk-free money. So regardless of the economy and regardless of if I have projects lined up, our team has the ability to take on a kitchen project, a basement. We could build houses. We could do any number of things, and I feel as though I'm insulated a bit from economically in that I'm not forced to just buy the next house and make a poor real estate decision to keep the lights on for my team. I can then shift that into some of the other areas that are currently in high demand of building. And you've got a great system, it sounds like, that you've built, and you've got the subs and you've got the team. Your challenge is, could you go into one of your local markets with those people being unlicensed and build a house for somebody or finish a basement, do a kitchen, whatever it may be. So you're still shouldering all of the risk of maybe your work dries up for a month and your subs find other relationships and now they don't come back, and you have a revolving door of subs. A lot of our subs we've worked with for 7 to 10 years, and there's a trust, and there's we get great pricing as a result. We get great work. They don't there's no questions asked anymore. They just know what wall colors to use because it's the same as the last 7 houses or whatever. So there's a piece of benefit and a piece of insulation as a builder that I have, in that I have that license, so it provides me some mobility in the marketplace to pick up jobs as I see fit, and that's part of what helps me to sleep well at night, because it doesn't force my hand to always buy that next piece of real estate to keep the team moving.
Yes.
And I think a good sub, I may be wrong, Justin, correct me if I'm wrong, but they should have their own workman's comp policy. Like, you shouldn't be hiring subs that don't have their own liability policy and their own workman's comp, because at the end of the day, if you own the property and that sub gets hurt, you're the one on the hook, because you're the owner of the property. So I would just make sure anybody that's working on your property, if they are a true sub, that they have their own workman's comp insurance, and that's very relatively cheap for them to provide.
And another thing, talking about that specifically, is when it comes to insurance, we always are an additionally insured party on all of their policies. It is not hard for them to call up their agent, add us as an additionally insured party. That way, if something happens, if they screw something up, we're covered because of their insurance too. And by getting the builder's license, it adds a level of professionalism that you can turn around and sell if you do try to pivot into the customer world. Essentially, if you're going to take on clients, there's an upcharge just to having that license. To be licensed, to do inspections, it's work, and you can charge more for that work.
One final thought on the builder's license. Eventually, you're going to be forced to get it. So you get to your 50th house, your 100th house, your 1000th house. Eventually, you're going to be forced to have it. And I'd rather you do it on your terms and on your schedule than be forced and then be behind the 8 ball. And now your entire business comes to a screeching halt for a month or 2 period while you work through that.
That makes sense. That make a lot of sense.
Yeah, and I want to add that I believe one of the arguments that was made last year was that your yield on your time is important, and the yield on your time flipping may not be as much as your yield on time doing some contract work for some paying customers.
And that's right now my primary source of right now my primary my bad. My primary to keep my crew running, as you were saying, is like I manage 28 properties. So we always doing something, you know what I'm saying? So it keeps, but at the same time, like I was talking to Justin about, that's at an investor rate. Like that's at they're expecting me to provide numbers, like you saying, for, to do this. They want me to be at certain rates, and that squeezes me. You know what I'm saying? So it's like I don't really take on any clients, none, because A, I don't have a license, and then B, I don't really want to deal with all of that. You know what I mean?
But I think that's what you got to look at too. Is you're working strictly for investors.
Yeah.
And as investors, we want to do things as cheaply as possible in most cases.
Yeah.
But the demand for labor is higher than ever before.
Right.
And as a result, your price needs to go up.
True.
You need to make money at the end of the day. You can't be doing it for friends for nothing.
Right.
I mean, that's what it comes down to. So you really need to reach out and expand kind of the group that you do work for.
Yeah.
And as you expand, your rates should increase.
Yeah.
And even the people that you do work for, they understand that the market is competitive, and you may have to bump your rates up a little bit, and you may lose some customers, but at the end of the day, you're at least profitable.
That's true.
You got to find a level of sustainability. The goal isn't to do this for 3 months, well, at least for me. I'm in chatting with you, I know for you as well. The goal isn't to just survive and limp this thing along. The goal is to build an empire. The goal is to do this for 10 or 20 years and to create wealth and generational wealth. And so if you look at it from the 10,000-foot view, unfortunately, all these things that we're saying is kind of the next.
That's the next phase.
Not necessarily the next step, but part of that equation.
Yeah, growing it up.
Yeah, and I would just say if you're dealing with the same 28 people and they keep calling you back and you're putting out an amazing product, the reason they're calling you back is because you're the cheapest guy in town. So I would start inking those rates up a little bit, and as long as you continue to do good work, a good contractor that is reasonably priced, that does good work, they're hard to come by, and you need to pay yourself for the knowledge that you have.
And I think we can talk about it openly. We've all had contractors over the years that we've worked with, and they've raised rates on us. Sometimes we squawk about it. Sometimes we go find other guys, and sometimes we just pay it because we don't want to lose the guys we have.
We can't do better.
We can't do any better. We know who we're working with. We're going to pay them what they want. We're going to keep them happy and keep them coming back to us.
Yeah, everything goes up as time goes. When I first started 19 years ago, a 2x4 was less than $1, and I think they're up to $4. So as lumber goes up and the cost of living goes up and gasoline goes up, liability insurance has gone up overnight. Everything has gone up except your wages, and that's something that you need to talk to the people that you deal with and say, hey, it's time that I get a raise.
And how does the saying go in regards to contractors? You get to pick 2 or 3: quality, price, or speed. Right. So you only get 2 of them. There's no way to get all 3.
That's so sweet. Quality, price, speed.
And I'd rather be high priced and high quality than fast.
Right.
In any other combination of
Yes.
those.
Yeah.
All right, so as an action item, getting your contractor's license.
Yes.
Was it contractor's or builder's?
Yeah, it's a builder's license.
Yeah, it's the
And
builder's
all
license.
you got to do is go take a test.
Yeah, I just got to take the test.
That's
now.
the worst
I
part.
did the time.
You
Yeah, I
were
put the
taking
time
the
in.
classes.
Yeah, I got
You
the
did
test.
it.
I
So
did
now
the whole.
you just
I'm
need
complete.
to take the test.
Yeah,
You got to
I
take
just
the
gotta
test
take the
within a
test.
year of a class. So that
So-
means like in
Yeah.
the next couple of weeks,
I
you got to
do
get
have
this
to take
test
this test, yeah.
scheduled and passed.
Yes.
So are you
Otherwise,
gonna
you got to
take the test?
retake
No,
the
I'm
whole
gonna take the
test.
test.
We might have to drive down there and take them to the test.
We're coming.
No, I'm gonna go take the test.
We'll drive them to the test.
It's they have like a refresh thing on Saturdays. I'm gonna just go to the refresh thing and just go take it.
And then we can each drive one of his trucks away
Yeah, exactly.
to the new buyer.
Truck back home, yeah.
Oh right, that'd be
We'll
sweet.
pay you $1,000 a piece. We're taking them home. We'll just pawn them off.
Yeah, we're pawn them off. Right, somebody will take it off our hands.
So the trucks,
Yep.
the builder's license, the money, where the money was coming
Yep.
from, those were all action items. There was a fourth action
It
item.
was
What was
the
it?
rental property.
Oh,
it was,
the rental property.
Yep.
That was we're advocating that you sell
Yep.
one of your properties so that you could use
Get
that
some
money
cash
to
flow.
pay off the trucks.
Yes.
So what happened there?
I use this cash flow. But yeah, I did that. And I actually, the guy who purchased it is actually here. He came. He's a friend. I manage that property now. But yeah, I sold it. That was cool.
So you sold it, but you didn't pay off the truck
I ain't
because
paid
that
the
was the
trucks
whole
off,
idea.
though.
Sell that, pay off the truck.
I put that in another deal. I was working on something. I had to,
And I think
Turn
it's a
some
good
bread.
point to bring up is cash flow management is so hard from a business standpoint, especially when
man.
you're starting out.
Yes.
every dollar you get in, it's so hard not to rush out and buy that next deal and spend it on something else or to pay something else off. You really have to be structured, and you really have to place those dollars where they need to go.
Yeah.
And sometimes it's painful, and you have to wait.
Yeah.
And I know that's hard to do.
Yeah.
But now you're still stuck in the same position with the trucks, although you put money into the next deal.
Yeah.
But my question to you, Ray, is in the use of that money, have you made a bunch of money?
Yeah.
Have you turned that money several times? Yeah, so I don't want to defend the continued ownership of the trucks, but it's easy to place blame on that. But if you've made $200,000 using that same money in the same time, I don't know that if I can follow. Well, I guess I'm just using that as an example. So tell us, how do you use that money?
No, I've done well. And that's what I'm saying. Like I've been able to get into new deals. I did probably like 8 flips last year, and again the year before I was just working for people and we was doing them, in 18. So 19 was much better as far as my output. You know what I'm saying? And this year I'm just hoping to continue that. If I can get 12 to 16, it's kind of my goal. If I can just go a little higher than I did last year, I'll be happy. So, and now that the money, better terms on the money. So now, if I can get to those numbers, this should be the year that I can.
But I still struggle with that because how much of the projects are your hard money guys financing?
Probably 50 to 60% of them now.
50 to 60%. So you got to come up with the other 50. Roughly, cash-wise, to pay it.
Are you asking what number of his projects are financing, or the percentage of an individual project are financed?
So you have a flip house. How much of the money for that flip house project is coming from the hard money guys?
Oh, all of it.
All of it. So they're funding 100%.
Yeah. They just.
So that's what I go back to. You have a money lender that's funding these things.
Yeah.
That money that you spent, you kind of put over there. And
that was early, that was because I sold the house like soon, like after we left. Like that was kind of one of the quick things that I did. So that was early. So like I said, I didn't start using the money from here until like May, like midsummer, and then like I said, I used it I think 2 or 3 times last year, and then we got a deal lined up we got one closed, and then we're about to do our first one for this year. So now it's more of finding more deals. Like that's where I've been talking to Steven at and developing a better process for my foreclosure business. I've kind of stepped away from it because we had a pipeline of houses. We kind of had bought a few houses, so I was able to, try to get rid of some stuff first. And now that we've done that, it's like, all right, now it's time to go get some more inventory. And I think that's where I really want to put my focus now is back to hunting houses because I haven't really been chasing them the last 6 months.
So let's go there because I think we kind of talked about last year and of the 4 action items, you accomplished 2 of them.
Yep, solid 2.
And
50%.
In a partial of a third.
Same amount he's paying for his money, 50%.
Exactly. Next week you'll accomplish a third, which is
we're gonna go take the test
for your builder's license.
Yep.
And then week after that, you'll sell your truck.
We go contract.
So, but now it's all, this is a new year, new challenges.
Yes,
you just kind of touched on that.
Yes, sir.
Because what was working for you last year is not working for you.
Man, it is shut down. So last year I talked a lot about the cash for keys, knocking doors. We would go to the auction, we'd get the list, we would condense the list down to deals that made sense, that had a certain spread to them. I'm hitting the doors. And it was great. Like that's how a lot of those deals that I did last year came about. But the problem with that now, probably like August, I would say. Now when I'm going to doors and it's like 4, 5, 6 flyers, just like mine at the door, and I'm like, hold on, time out, what's going on here? And then when I do get somebody to the door, they like, well, I've been called by 12 realtors, and I'm like, bro, nobody was talking to these people at first. Like, what is happening? But it became the new thing. Like, so now everybody, when you go to the auction now, it's a full auditorium. Ain't nobody buying though. It's like 3 people that buy, and everybody else just there to get the list so that they can go chase afterwards. So now I had to scrap that. So that's why I say I kind of stepped back, and now in talking to Steven and a few others here, it's like, all right, it's ways that I can better do what I was doing and have a higher success rate if I do it right. And that's kind of what I want to focus on now.
Can I just quick recap kind of what's going on?
Yes,
all right.
Of course you can.
Sorry, so you were going to the sheriff's sale.
Yes.
You were not buying houses at the sheriff's sale or buying the notes.
Yep.
You were just taking down what they sold at, determining what the spread could be on these houses, running out to the existing homeowner that's in the house.
Correct.
why they had their redemption period open.
Correct.
You were then buying it from them, buying their redemption rights from them.
Yeah, cash for keys.
Cash for keys. So you could flip the house, redeem the house, etc.
Yeah.
But now the problem you've run into is that there's a whole bunch of realtors out there that realize there's a spread on these properties, and they can knock on the doors and just sell their house for them for a commission. And
yes, and my thing was, and that's beautifully explained. With the cash for keys, I'm trying to get them out as quickly as possible. With his realtors, like, hey, well, you can just stay here and kind of just let me bring people through, and their plan sounds a little better initially. So again, if I don't get to them. Now you got to get to them super fast. Then it's like I say, once they get that opportunity and they hear that, like, oh, I get to stay in my house, where I'm like, hey, you got 30 days. Like, I need you out of here so I can try to rehab within this redemption. That idea of it, once all these realtors and stuff start getting into it, it's like, oh, shoot. Well, if I'm not the first person that they talk to, if anybody pitched that realtor play that's just listed and you can stay in it, just clean up, just vacuum a little bit and touch up some paint, whatever the realtor's recommendation was. That sounded a lot better than me rushing them out in 30 days and their whole life getting uprooted. And I'm trying to give them as low as possible.
So I've got to hear what Steven's recommendations were. I don't know who wants to share it, but Popcorn Steven.
Go ahead. This is where Steven Benedict comes in, because you had been talking to Ramon. And
so for those of you that didn't listen, I've been on Brian's podcast before, and all I do is buy sheriff deeds at the sheriff's sale. And I explained to Ramon that he said he wasn't getting the list until the day of the sale. And I explained to him that they're published 4 weeks in advance in the local legal news, and he didn't know that. So I explained to him that the Detroit Legal News, I don't know who's listening to Detroit, but the Detroit Legal News comes out with a paper. Actually, Wayne County, it comes out about five days a week. That's how big it is.
Yes, it's massive.
So, he's running into competition after the sale, because one thing that I can say is realtors are lazy. They wait for things to fall in their lap. They don't really. So if you can beat them to the door by getting a 4-week head start, and you can get the cash for keys in that deed, when that person goes to knock on that door, that realtor, I signed the deed over to, Ramon's company already, and I'm working with him, and they have to turn around and walk of shame. Yeah. And after a while, when enough realtors go to these houses and other people are beating them to the deal because they're picking up the Detroit Legal News and going there 4 weeks prior to the sale, they'll get tired. Yeah, they'll get tired.
And what I was told always about our Detroit Legal News or the Wayne County Legal News is that it's not accurate. It's so big and so daunting that you're gonna waste time trying to sift through that and actually find something that's gonna go in the 4-week insertion that it's supposed to go in, because it's so unorganized. So for me, coming up in this, I've always been told that was a wasted resource, because the way that they provide us the information, it's so daunting that it deters. And
this is exactly what Steven wants everybody to think, because he has invented the wheel that spins for this very process.
That's what I heard, and I'm like, oh my God, this is amazing.
I can see Steven smiling over there, loving it. Let's let them all think this.
Yes, I can tell you. I can tell you that it is the only resource, and it's so accurate that it'll make your head spin. The only way that a property can get to the sheriff's sale is by being in that newspaper. Yeah. So that is so accurate, and it is not a waste of time. And what I can tell you is just to put a disclaimer out there is going to be times where you go and knock on that door on like week 2 of the insertion, and they say, you know what, I caught it up. I get that. That's going to happen. Yes. But, I don't know what it is. I can tell you, speak from heart, in Muskegon County, 85% of the people that are published make it to the sale on Friday. Yeah. So the hardest thing for people to do is to accept the fact that their name is published and you're a stranger coming to the door, and how do you know about me? Yeah. And you pull out the legal news and say, you know what, this just went out to 1.5 million people in Wayne County, and this is your name, so let's talk with one another and be real about it, because the situation's real. It's published now. Yep. Here's the date it's going. You can work with me, and depending on how much cash you have, you can offer the fact of, I can save a foreclosure on your credit. Yeah. As long as you can buy it before the sale, they won't have a foreclosure on their credit report.
Steven, is there a reason he should not buy at the sheriff's sale?
There is no reason at all.
I know there's risks and challenges that you encounter every day with it. But
there's risks and challenges. I mean, more importantly, like I said on the past podcast, you want to make sure you're buying a first mortgage. But there are so many opportunities of, for example, a house that's worth $100K, the first is $30K, and they have a second for $70K. Mm-hmm. A realtor can't help them out. They're going to lose $7,000 if the commission's 7%. You buying the sheriff's deed for that $30K are the only one in the world. Donald Trump, bankruptcy court, whatever. Once it goes to the sheriff's sale, you are the only one that has the power to get rid of that second to create a $70,000 profit. And so it's just so important. And I know buying in the state of Michigan, the amount of people that are over leveraged is insane. So many people are financed to the hilt. And I just think the sheriff's sale is the best opportunity for real estate right now.
I've always had that same sentiment. I know that this is the way because I have but my thought was always afterwards. It's like I got the deed. There's no other way for me to get an address, and I know that these people are in trouble. There's no other way for me to get a spread and know the spread before I go to the door. Like that was always my thought process. But again, if I get it 4 weeks in advance, I can definitely run title. We can definitely have our realtors run comps. And like you say, if I go in week 2 and week 3 and go knock that door, that's a whole different ball game than me going after it. Now, like you say, it's already flooded, or now they're in like retreat mode. That's. Like you say, you catching them off. Mm-hmm. That's amazing. And that's what I say. That's just a leg up. That's just something I can't wait to get back.
I think it goes back to the fact that this stuff takes work.
Oh, I know that. Oh, definitely.
And energy. This is not a path of least resistance. Yeah. You've got to put in the time and the hours to sort through that legal news, to sort through the notices, and to figure out which deal could possibly make sense.
It's just all about where you get your information from. I just was told that it was a dead duck. I'm like, that thing don't work. And I'm like, oh, okay, well, push it to the side. I kept, trying to figure it out another way. But it's like when you hear that is the thing, like, bro, they know other, like, that's it.
Yeah, and I would say, I buy in 6 counties, and the sale in 6 counties for all 6 together lasts less than an hour. But I spend close to 40 to 50 hours a week just in research, making sure it's a first mortgage, trying to pull up previous photos. And, if it was sold in 2019 and it was boarded up then, I probably want to drive by and see if it's still boarded up, what went bad. If it was boarded up in 2013 and I see they refinanced in 2017 for $100,000 more, they put money into it. So the research is the biggest part of it, but if you don't do the research, you're never going to see the reward.
No, 100%. And as I say, with my post auction, I had, like you say, it's the same type of process. I got to figure out my title stuff. Again, once I condense that list down to things that I think are worth knocking, now it's like, okay, let's go. Let's create flyers. Let's go drive them. Let's knock them. Let's do that.
Yeah, and I would say, and I don't want to put you down, but the people that go after the sale are the ones that do not want to work because the list is given to you at the sale.
That's what I'm saying. I've now learned that.
So you have
now that I walk into the auditorium, and when we go on Thursday, that boy going to have 60, 70 people in there.
Yeah.
And when I used to go, it was like 18 people.
And that's the thing. So I guess if only 3 people are buying out of 60, it's because they're not willing to put in the work of the legal news.
That's it. Them dudes know. And I'm always like, man, how they know that was going to go?
Yeah.
How they know that was going to go? And
it's a newspaper that costs. It's a newspaper that costs.
They must be paying some
free.
lawyer. Like,
it's free.
Paying,
the newspaper's free. The legal news is free. Yeah. It just costs money if you want it mailed to you. But the legal news in every county is free. You can pick it up at the gas station. Yeah. But if you want it mailed to you, so you don't have to do that work, there's a mailing fee.
Don't want to do that work.
But
so Ramon, one of your challenges then is that if you buy at auction, you have to have cash.
Yes.
And the situation you have with your hard money lender is such that they want to be on the deed and all that, but that doesn't quite work with the auction situation,
right?
Or the tax lien auction.
So that's another. So I have, and that's where I'm gonna probably have to team up with some of my guys that's back home and do it that way. Initially, you know what I'm saying, until we get the ball rolling. But again, if I can get it before it go to auction, I can still make that same transaction with the hard money. I just got to get it before it go to auction. So that's where, like he said, in week 2 of that insertion, week 3, if I'm knocking doors, then that changed the game.
You'll be the only one.
Yeah, ain't nobody else hitting them at that point. So that'll be like game changing. So then I get to pick and choose. And now, like you say, it's just research at that point. We you got to be in the legal news in the morning. Like,
it requires work to go before the sale date.
Yeah.
And like I said, you're running into competition because everyone that's competing against you is going to that sale to get that free list because they're too lazy to knock on a door with the potential that sale could be canceled or adjourned prior to.
Yeah.
And so there's going to be plenty of people that tell you along the way, like, I'm going to catch this up. It's not going to work.
Yeah. Yep.
And then they'll end up at the sale. And if it's such a good deal, you'll find a way. You know, when a house is worth $200K and it goes to the sale for $40K, you'll find a way to come up with that money. I think you got it in you.
Yeah,
you'll find a way to come up with that money.
And being able to follow it and track it, though, I think will be and that's the step that I didn't have to be able to talk to the investor about. So now, once I get this figured out, I feel like I'll be able to articulate better and in turn come up with a plan for us to be able to somehow figure that out. You know what I'm saying? Like, it's just talk, conversation now at this point. Now that the idea has been sparked.
Stephen, do you have any other actionable advice for Ramond?
I would just say continue to, beat the concrete and the pavement out there, and eventually, it'll fall into your lap. But there are many people in the Wayne County area, and it goes back to the private money. People in your family, people that have equity in their home that you could offer 6 to 10% to, and they'll come through for you. And I truly believe who you're getting your money from today. I do believe that he would give you a line of credit after 4 or 5 deals so you can be successful and offer him a better return. Because, that's just where it's at. There's a reason, Kent County, I go to Kent County sale. There's a reason there's 40 individuals in that room and 30 of them are bidding. There's a reason for it. And I think it's the best way for real estate. We had someone speak on, buying notes at the conference this year and talked about sending them to the sheriff's sale, and she makes profits after she buys them at a discount back in the day. Now she focuses on performing, but there's good opportunity, and you got the right thing. You just have to work prior to, and you're going to eliminate the competition you'll find very fast.
I think so, too.
Yeah, and you bring up a concept. So with Ramon's hard money lender, he's lending you a certain amount based on the acquisition price and the rehab.
Yep.
But, Stephen, you're talking about a line of credit. Elaborate on that a little bit.
You get with your private money lender or a family member or a home equity line, and as long as you're borrowing money to make smart money, I guess, to turn it into good profits. I think if you're paying, for example, your private money lender now 8%, and you said, hey, if you give me a line of credit and I can close one of these deals, I'll give you 12%. I think after you've done 4 or 5 deals with them, you'd be a fool not to work with you. But just explain to him, that this sheriff's sale has so much opportunity, the profit margins are so much bigger, and the opportunity's there. Because you're only competing against 3 people in that room at the sheriff's sale. Once you leave the sheriff's sale, you're competing against 30 or 40. So, and the biggest piece of the pie, in the sheriff's sale is you're in first lien position. You control things. You can speed up the foreclosure through the inspection process. You can wait out the redemption period. You have the possibility, I shouldn't even say possibility, you are the only one that can get rid of the federal tax liens, the state tax liens that are on the place, the second mortgage, the home equity line that they took out. All that stuff you have the power to get rid of through the courts and an attorney by buying it directly from the sale instead of chasing it down afterwards. Because if you chase it down afterwards also, if it has a second or third, that you're responsible for that. Yeah, that's exactly it. So if you get the deed and you get the deed after the first went to the sale in Wayne County and you get the deed afterwards and you didn't buy it at the sale, you're responsible for any liens that come with that. And so the profit margin is so much bigger if you can buy it at the sale.
So let's wrap it up here and make sure that we know what your action items are, and that Justin and Patrick have a chance to weigh in on any last thoughts.
Yeah, my only final thought is I got to give you a ton of credit. Yeah. And it's hard to sit down with a bunch of real estate chumps like us. It's hard to take these shots with a smile on your face. You could fire just as many bullets at me if we got intimate about the details of my business. So I got to give you a lot of credit.
I appreciate it.
I speak real estate with countless people every year that want to go buy, go do coffee, go do lunch, whatever, and 9 out of 10 people don't take action.
100%.
So though it may be hard to hear some of these things we're saying, I want to flip the script a little bit and just give you a lot of credit for the fact that you're doing something, you're learning, you're choosing to make mistakes, and I predict that in 5 years, 10 years, 20 years, the things that the effort that you're putting in now and the things you're hearing and the things you choose to implement or disregard, however you choose to take it, will serve you very well, as opposed to the normal person that just wants to pick my brain. I hate the term "don't touch my brain, please," but they want to pick my brain, and then they never do anything about it. I'm not a motivational speaker. I can share with you my experience and my thought, but you've actually done something with it. So I would imagine that anybody at this table would be glad to be a resource for you at any time.
Absolutely.
I appreciate that.
And we really do need to commend you. I mean, you talk about you flip 8-9 deals last year. Something like that.
Yeah, who else has done that?
That's a lot of deals.
It is.
That's a lot of deals.
A lot of people will never do that in their lifetime.
And still doing work for other people.
Yeah, and doing stuff
and
on
managing
top
the
of
properties,
that.
right?
You're a hustler. You
We do
get out
straight.
there and you beat the bushes. There's a lot that you got going for you.
Yeah.
And I think that's the thing is we do beat on you, but
It's because we love
it's
them.
love,
It
though.
is.
No,
It's
it's
a loving thing.
all
It's
love. Like, trust me, it's
and the
love. Like,
problem
I
is
feel
we've
it.
all
Like,
made these same stupid
Yeah.
mistakes.
Yeah.
It's like we're just trying to help you out, and I hope you get that.
oh
at the
no,
end of the day,
100%.
but-
That's why I come back.
No, you're doing great things. There's no doubt about it.
I appreciate that, Justin.
Yeah, it's just one of those things. I think you'll be so much further ahead. You get rid of some of that debt load,
Yeah.
and you move your life forward just a little bit further.
Yeah.
Keep as much money in the business as you can. I think people
Yeah.
make that mistake all the time.
100%.
They go and they get a flip done, and they have all this profit that's sitting in their bank account, and they instantly
Buy another truck.
evaporates.
Gotta do buy another
Buy
truck.
another truck. It's a really hard thing to do, and you need to be really disciplined as
Yeah.
far as how much money you're pulling from that business.
Yeah.
And
No,
think
I try not
that's a
to.
problem
Yeah,
for a
I
lot
try
of
not to.
people, too.
My thing is I
Leave
put
it
too
there,
much back in.
let it grow, take out as little as you need to
Yeah.
get by, and keep moving forward.
Yeah.
I mean, you're doing great things.
Yeah,
Think
that's
long
definitely-
term. Every decision you're making now has a 5-year effect, 10-year effect, 20-year
true.
effect. Don't think what is just best for today.
That's so true. Thank you, guys. I appreciate y'all.
Yeah, so Ramon, action item.
Let's do it.
First of all, take that test.
Yes,
Get
yeah.
your- get
I think
your
that's very
license.
important. Yeah, to be able to pivot, like my man.
That's
Justin
low-hanging
said.
fruit right there.
Yeah, easy
Right?
work.
So
Yeah,
do it. Second action item, sell the trucks.
still got to get
Just
them
do it.
trucks off. Yes,
Don't
just
think
do
about
it.
it, just
Like
do
Nike
it.
said, just do it.
Yeah.
I got you.
Third action item,
Implement a process for the auction. Like get a system.
implement.
Get a
follow
system.
legal
And,
news.
yes,
Start by
get a-
picking up the legal news.
Yeah, get a system in place and start putting back a way to try to hammer out things clearly so I don't have to chase. Because
Absolutely.
chasing after is not a good thing.
And fourth action item is
Raise your
line
rates.
of credit.
Oh yeah, get a line of credit. I'd say raise your rates for the people you're doing work for too. Should be another action item. You need to start making money
Right now, your rates just went up 20%.
Rates just hit up off this podcast.
Yeah, well, you put up 5.
And the fifth action item, sell the trucks.
Right. Make sure we get done with that.
That's probably 5 through 10.
7th, 8th, 9th, and 10th action item.
100%.
And the first, second, third, fourth.
And the sixth one is to come back next year at the same time
Yeah.
and tell us that
And
you
tell
did,
us, hey,
that you
it
did
was
5 out of the 5.
You'll be jumping up and down the hallway yelling that I sold the trucks. I got rid of them.
Yeah.
If you do not sell those
Yeah.
trucks, we will drive them here next year. And we will
take them
drive
to
them into the Grand River. And we will watch them sink to the bottom. And sink. All
I
right.
appreciate that, fellas. This
Well,
is awesome.
Ramon, thanks so much for allowing us to have this conversation
Yes.
with you. And you certainly share a lot, and you're very open about it, and we appreciate that.
Oh yeah. Hey,
And
it's only gonna make somebody better out here.
Yeah, I mean, you know what? It helps a lot of people to hear
Yeah.
what you're going through because
100%.
I guarantee there's a lot of listeners who are going through the exact same thing, having the same exact conversations inside their head or with their business partners or with their spouse. And Stephen, Patrick, Justin, you guys, your advice is invaluable. So thank you very much, everybody.
My pleasure.
Thank you.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.